Welcome guys to today's lesson. I'm so glad to have you here. Okay, so this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe. Okay, so in our last video we talked about intraday order flow and understanding the daily range. Okay, so we talked about that using the futures market. Okay, so today we are going to be looking at this concept from the Forex market. Okay, we're going to look at it from the Forex market. All right, so this lessons or this teaching rather is going to be much more easier for you to understand if you already have a whole knowledge on market directional bias. Okay, so it will be a lot easier for you if you know how to get your directional bias on the market on a daily basis. Okay, so we are going into this teaching with the intentions that you watching this video right now, you already have an idea on how to determine your bias for the week and on a daily basis. Okay, so but just in case you are not yet familiar with the concept, or you don't know how to determine directional bias, you can check out some other videos. I'm going to leave a link on in the description box that will take you to the teaching we did in the past. Okay, on determining directional bias. Okay, so let's get started in today's teaching. Alright, so we are looking at intraday order flow. Okay, and we are going to be using the Australian US dollar. Okay, so every trading week, if you have been following me for some time now, you will know that I always start my analysis from the weekly perspective. Okay, start my analysis from the weekly perspective down to the 1 minute time frame. Okay, so this is the weekly chart on the Aussie dollar, and currently price is bullish. As you can see, price is bullish on the weekly time frame. Okay, so this is my bias for this week. Okay, we have a fair value gap right here that price retraced off from. Okay, and we are still expanding. Okay, so let's see some annotation on the chart. Okay, so as you can see here, we have this weekly fair value gap right here. Price bounced off it and the retracement retraced a bit lower. Okay, and right now what this week price is still bullish, and I'm expecting price to fill this gap completely and might as well reach for this buy side liquidity. Okay, reach for this buy side liquidity resting above this old high, and probably trade into this old weekly fair value gap. Okay, so now this is one of the reasons why I still expect some bullishness in Aussie dollar. Okay, because looking at this range, from the high to the low, you will see that we are still currently in a discount market. Okay, we are still currently trading below the 50% level. Okay, so price is likely to reach for the opposing array, which is the premium market. Okay, so price is likely we have learned earlier on this channel that price moves from a level of discount to premium and vice versa, premium to discount. Okay, so currently we are in the discount sector of this market, and we are expecting price to reach for the premium side of it. Okay, so this is our first premium array, and probably this is our next draw on liquidity. So price is currently wishing for one of these two places, okay, one of these two levels. Okay, so this is what I want to do. So I'm going to be sticking with the bias bullish for this week. Okay, so my bias for this week is bullish. Okay, so now this is the current range we are right now. This is the current range. As you can see, price breaks structure right here, bounced off the equilibrium, so we are currently expanding. Okay, so retracement has happened and we are currently in an expansion phase. Okay, we are currently in an expansion phase. So there might not be enough price action data here to see the expansion happening, but we are currently expanding. Okay, so because price have already traded off the discount array. Okay, price has traded off from a discount sector and we are currently rushing up. We are currently expanding higher. So price, I want to likely see price. It might not happen this week. It might extend to next week, but I'm looking at this level here and I'm looking at this fair value gap to be completely filled. So I'm sticking with the bias, bullish bias for this week. Okay, so now this is the daily time frame. Okay, after the weekly time frame, we'll go down to the daily time frame. Just in case you don't know how I does this or how I do it, and you might want to check out the previous video and I made an explanation on it. Okay, so we have this range. Okay, we have the market bouncing off from the weekly from the discount sector on the weekly range. Okay, this is that overall weekly range that we are. This is equilibrium and this is price trading off the weekly discount market. Okay, so now we have price breaking structure to the upside, so we are currently expanding right now, as you can see. Okay, so looking at this trading range from this low to this high, you can see that price is still currently expanding. Okay, so but what I'm seeing here, looking at this current range right now, I'm seeing a fair value gap. So I don't know if we should expect a retracement down to this fair value gap before continuation, but from the weekly time frame which we are trading in this direction, we are currently expanding, so there might likely be no retracement. Okay, there might likely be no retracement and price might just take out this old high on the daily time frame. Okay, so this is our next draw on liquidity. Okay, so I have a video on this channel that talked about the top down analysis from the top down analysis. Okay, on how to analyze the market from the weekly time frame down to the 1 minute time frame, and what we use each and every time frame for, what we use the weekly time frame for, what we use the how to use the daily time frame, and how to use the 1 hour, 15 minutes, 5 minutes, and so on and so forth. Okay, so you might want to check it out and I'm going to leave a link to them, okay, to those videos on the description box. Okay, so you might want to check those videos out. So right now we are currently expanding and I'm expecting higher prices. Okay, so I'm going to stick with bullishness for this week. Okay, so for the sake of this video, we have been talking about bullish price, and there have not really been much videos on bearish market. Okay, on bearish market. So right now what I'm going to do, for the sake of on this video right now, I'm going to look at a bearish market. I'm going to look at this past price action. Okay, because we have only been covering bullish market for some time now. We have not really talked about bearish market. Okay, although is just whatever we are expecting on the bullish market is just a reverse for it on a bearish market. Okay, so in other words, what I mean is that if we are expecting higher prices, we should see some level of some level on attack, on some level, some major stop hunts on raid on sell side liquidity. Okay, for price to go higher. In other words, we have to see some old low get smashed out and expand higher. Then it's just a reverse case for bearishness. Okay, for bearishness we have to see some kind of old high taken out and price drop. Okay, so for the sake of completeness, the example we are going to look at on this teaching today is going to be on bearish So in this example, we are going to look at a bearish market profile. Okay, so we are going to look at this day's profile. Okay, this is probably on a weekend. No, this is Monday of a new week. Actually, this is a Monday of this new week. Okay, we don't trade on Monday, so this should be on Friday, Thursday, Wednesday, Tuesday, and on Monday. We don't trade on Monday, but for the sake of completeness, I'm going to look at this bearish price action data and show us how we can apply the concept we have been learning so far on bearish market profile. Okay, so let's go down. Okay, let's go down. So this was what I was explaining earlier. Okay, about the daily time frame, and as you can see, this trading range price, after bouncing off from a discount market array, price is currently expanding upwards. Okay, so I'm looking at this range right now, that this range have to be taken out, otherwise, so this retracement might not actually be necessary, because we are currently in an expansion phase and we are still in this range. Okay, so price have to expand higher, price have to take out this old high before we should expect some measure of retracement. But just in case, no one has influence over price might just likely do what it likes. Okay, so this, I'm just taking precautions, but I'm still sticking with my bullish directional bias. Okay, so I'm still very much bullish on this market. Okay, so that's just that for on the daily time frame. Okay, so now this is the day we are going to look at. We are going to look at the price action of on the 14th of March 2022, which was the previous week. Okay, which is the previous week. This is on Monday. Okay, this is a new week. Okay, a new week has already begun here, and we are going to look at the Monday of the previous week, which is March 14, 2022. Okay, so now this is the 1 hour time frame. As you can see, this is the Monday's opening candle, 12 o'clock New York time, and the opening candle for the new week, for Tuesday, 12 o'clock March 15. Okay, so now each time frame has its own specialty, as how we apply it to the charts, because our trading is mostly on time and price. Okay, so if you don't know how to apply each time frame or what to do with these time frames that I'm using here, or you don't know how I arrive at this analysis, or why I'm using these specific times of day, I have videos on this channel that talked about and explain them. Okay, so you might want to check them out. Okay, so now this is on the 15-minute time frame. We use this for our intraday trading, and these are specific and important times of the day outlined here. Okay, so you can see this is the 12 o'clock New York time, this is the 2 o'clock a.m. London session market. This is the opening of the London session to 5 o'clock. Okay, and this is the opening of the New York session to New York lunch hour. Could see this is the time window where we start hunting for our money trade. Okay, this is the time window where we start hunting for our money trade. Okay, now remember, our bias is bearish, and we are looking for sell entry. Okay, so what we are going to look for, we are going to anticipate some level of stop hunts on buy side liquidity. Okay, which is, in other words, we are expecting some old highs to get run out. Okay, some attack on buy side liquidity. Okay, so let's see going down further. Prior to this is the 12 a.m. Monday's opening, and this arrow here is pointing at the candle that opened up the London session. Okay, as you can see, we have an old high right here. Okay, so what we look for is a swing high prior to the London session opening. So this is the first swing high. This arrow is simply pointing to this candle. This is the candle that opened up the London session. Okay, so if we are going to go short, our high probability entry will be above the opening candle 12 a.m. New York time. Okay, so we are going to look for an entry. The high probability setup entry is probably going to be above the opening candle 12 a.m. New York time. Okay, So as you can see, this swing high is currently above the 12 a.m. New York time, but price didn't trade through it. Okay, so there was no major drive through on this old high, so we didn't get an entry right here. But as you can see, we have a long entry. Price traded below this old low to grab sell side liquidity, but we are not looking for buy entries. Okay, we already have enough tons and tons of examples on buy entries, bullish market profile. We are going to just stick with bearish market profile. And as you can see right here on the London session, we got no trade entry because there was no old high already taken out. Okay, so let's just go down further. Then this is the New York opening session. Okay, this is the New York opening, 7 a.m. New York opening. Now this is the first swing high prior to the opening of the New York session, and price just trade above an old high to grab buy side liquidity. Okay, taking out the buy stops and grabbing the buy side liquidity resting above this old high. So we'll go down to our lower time frame. This is the 1 minute time frame. Okay, this is price trading above that old 15-minute high prior to the New York opening. Okay, so now price grabs liquidity and we are going to look for shift in market structure. And as you can see, price did not trade below any significant short-term high, because this is the short-term high that led to the break of that led to the raid on buy stops. Okay, so we are actually going to be looking for a shift in market structure, and as you can see, price just kept going higher, and that's our shift in market structure. This would have probably been our entry, but I wouldn't have taken this trade if I was trading this on a live chart. Okay, I would not have advised this kind of trade because the risk here is too much, it's so huge, and compared to the reward is more like 1-to-1 risk reward ratio. Okay, so we would have probably gotten in here, and this would have been our first partials out of the market. Okay, but I wouldn't have take this trade if, well, I never knew if it would have, like, I didn't know before. Now I'm just using the benefit of hindsight that price reversed on me, but this risk is just too huge, and I would not have bothered myself taking an entry like this, not knowing fully where the risk reward ratio. Okay, and as you can see, price turned around here, and maybe if we have an entry right here, our stop loss would have been above here, and our first partials would have been here, and would have gotten stopped at a break even market. Okay, so let's go further. Price stopped us out and kept on going higher and took out another significant high. Okay, this was an old high, acting as what, equal highs, acting as resistance. So retail traders are going to see this as resistance, and they are going to sell it. Those that were short earlier on are going to trade their stop loss above here, and those that saw price bouncing off are going to sell and put their stop loss above this old high. And as you can see, price bounced off a bit and smashed through. Okay, so now we have another old high taken out. Okay, we have another old high taken out, so let's wait and watch for a shift in market structure. Okay, so now we have a failure swing here, and price broke structure downwards. Okay, so this is our fair value gap, and this is where, if I was trading this market on a live chart, this would have been my entry right here. And as you can see, compared to this, our risk is quite low. Okay, so this is kind of no trade for me, because this risk is just too much. But as you can see here, we have kind of a lower risk compared to this, and our first partial is kind of huge, because this would have been my first. Probably I would have gotten out of the trade right here, as you can see. Okay, so this would have been my first partials, second, and probably collapse the trade right here. So this would have been my partials I would have taken out some positions here, and finally, so this would have been my edge. This is my kind of idea trade. Okay, this is my kind of idea trade. You have to, uh, minimize your risk and maximize your profit. Okay, so this would have been a no trade for me. If I was trading on a Monday, this would have been a no trade for me, but I don't trade on a Monday, and so I definitely did not trade this market. Okay, I did not trade this market because Monday is no trading day for me. Okay, so as you can see, we got 38 pip stop loss, and 234 234 TP target. As you can see, 6 to 1 risk to reward ratio. Okay, so this is a good trade. So hopefully you will find this video helpful and insightful, and just in case you are not really familiar, or you don't know how to go about getting your directional bias, or working your way, doing a top down analysis from the weekly time frame down to the minute time frame, you can check out the my previous videos. I'm going to leave the link on the description box. Okay, so you can check it out and watch those videos. And please, if this is your first time, kindly subscribe to this channel, turn on the notification bell, like this video and share it with your friends. Okay, so now I'm working on I promised we are going to create a telegram channel for this community. Okay, and the telegram channel is going to be more like, we are going to do it in a way that you're going to bring your own charts, your own assets class that you are interested in, and we are going to do an analysis on it together. Okay, so I'll bring mine, you bring yours, and talk about it. And if you are having difficulty on any area at all on your trading career, I'm going to help straighten your weakness, and that way I hope we'll get to learn faster. Okay, so that way I hope we get to learn faster. So but I promise it's going to be only when we get, we're going to create it only when we get to 200 subscribers. Okay, so let's keep the subscriptions coming in, and see you guys on the next video. Thank you for being with us today.